don't know, PSI is at the end of their contract coming into December. And I've been talking with Les for quite a while about Advantage Management. When he showed up several months ago and gave us a proposal, I was unable to be here. But after I read their current package, I was pretty intrigued, and Scott was on board with them from the get-go. So I kind of figured it was important for us to be able to ask some more questions and see them. Again, I've had the opportunity to sit down with him and kind of go into a couple of things. The one major concern that we have, you know, I'm speaking on my own behalf, is our budget. You know, we all want to save money for each one of our pockets. And I think that if we find a management company and start cutting our funds a little bit, we can all save a little bit of money. And if we continue to follow the budgets that are being handed to us and not try to analyze them a little bit better, we're never going to save anything. We're just going to keep putting money in a pot that's not going to benefit any of us, but later on, 20 years down the road. I think we can do that by cutting our insurance, and that's why Mr. Paul is here. He's going to talk about an insurance plan that he has offered to us. Les is here with Advantage, and he's going to basically explain what his services would be. Our contract with PSI has been going month to month for several months now, and they have decided to terminate our contract at the end of December and did not want to renegotiate. I didn't see a problem with that. I was on the phone quite frequently trying to find, you know, a middle as far as numbers go, and I never could get anything for numbers. So I says, thank you all very much for your service. And then, you know, last week I got a phone call that says no longer be represented. Well, I'm glad I was proactive and getting involved with this gentleman here. So without further ado, Mr. Les Sly, if you'd like to tell us a little bit about Advantage Management.
I would love to do that. Advantage Management has been around for about 13 years. We manage approximately 100 properties from the Hyde Park area on the south up to Highland Park on the north and the northwest suburbs. And our real focus right now is to expand to the western suburbs. We are a full-service management company, meaning we can do anything from A to Z. You can take all of our services, or you can take accounting only, or any portion thereof. So you're not obligated to utilize and pay for all of the services that we offer. There may be some services that are not pertinent to your particular property. What we try to do, and we think our claim to fame, we don't have a set program that we say this is the way it is, this is the way you got to go. Basically what we do is we present our total package, and we say these are the things we can do. And then we get together with the board and the community, and we determine what you guys really want to utilize and what the cost of that will be. And then we basically customize that for your particular community. In every community of the 100 that we've got, the programs are different in almost all of them. So what you'll find with us is a lot of flexibility, a lot of transparency. We have in our contract guidelines that require us to divulge to the ownership and or the board whatever information is asked for. What I think I'll do, since our time is limited, each of you has a generic proposal, if you will, and there's some bullet points in there, but what I wanted to do is just highlight some of the things that we offer. Basically, we will maintain all records. We maintain that in our system. We have one of the most sophisticated property management software programs there is. It's called Condo Manager. It's specifically for associations. It's not QuickBooks. It's not some of the others that are out there that are generic. It gives a lot of information to both the homeowners and the board as to what is going on. And every homeowner has access on an ongoing basis to that information. So if you as an owner want to know where you are on your assessments, are you behind, whatever. You can personally go onto that website and access your account and see exactly where you stand. You don't have to call management. You can go on there at any point in time, 24/7, and get information pertinent to you. The board has the ability to go over and above that in their responsibility as far as running the association, to know exactly where you are as far as the association is, as far as payments, receivables, payables, and any legal litigation, any information that is pertinent to the continuing and ongoing of the board is available. We will assist in the formulation of your annual budget going forward. We don't make your budget. What we will do, we have a worksheet. That worksheet is based on what you have spent last year, what you have spent to date, and what we would project going forward for the next year based on our experience as far as the expenses are concerned. Then a draft is sent to, actually is worked with the board, and then upon approval of that draft, that is sent to all of the homeowners. You have 30 days to give input, say that you like this, don't like that, or why is this such. And then whatever comes back, that is reviewed again and discussed until a final determination is made. And then we send out a final draft. And again, at that point, if there are no responses to that, then the board votes on that budget that year. But it's the board and the association who determines what your budget is going to be, not Advantage Management. We will assist you, we will recommend, we will get information for you, we'll help facilitate. We will not make the final decision as to what your budget is. As far as delinquencies and collection action, we will, in our accounting system, you will get a monthly financial statement by the 20th of every month for the previous month. That financial statement will show you everything from general ledger, bank account, receivables, payables, everything that has gone on for that previous month. And that will be disseminated to the board for review and or corrections, input, or whatever. That's automatic. The board says that. I'm sorry.
Electronic as well.
Exactly, yes, yes. And that's on a monthly basis, as I said, by the 20th, without request, without having to call us for that. You will automatically receive that. Again, on a monthly basis, we will follow up and report any budget deviances that you need to be made aware of. You know, if you're running over, under, or whatever, we will make you aware of that on an ongoing basis. We will, as far as your rules and regulations, if in fact they need to be reviewed, revised, updated, based on condo law, which everything is supposed to be in compliance with, your decks, we will review those and if necessary help you to upgrade, update, and revise those. Now again, the things that I'm going through are all included in our monthly management fee. There are no extras for what I'm going over. As far as whether it's capital improvement, whether it's ongoing maintenance with contractors, we will not bring contractors in and say, this is who you should use. The first step is that who are you using for landscaping or snow plowing or whatever else you might be using. If in fact you are not happy or you just want to search to see if you can get a better price, we will provide you with 2 or 3 other contractors so that you can compare. We will not tell you who to go with. We'll make a recommendation based on our experience, and then again, the board will vote on that and make a decision as to who you go with. This is an important point because we are very proactive. That's another thing. We will, on an annual basis, review the contractors you've worked with, and if you have spent X amount of dollars and we know that we can do better with another contractor, we will present that to you. So, insurance as an example. If in fact I'm saying, I'm looking at it, I'm saying, well, you know, you're spending X, and I mean, you really don't. We will go to the brokers that we work with and ask them to present a proposal to try to improve on the situation that you're currently working with. And that should be done on an annual basis. We have a 24-hour emergency response system so that if an emergency comes up, you can call a 24-hour 800 number to get response for that. We will attend up to 4 association board meetings at no additional charge. Our contract, it's not an all-inclusive, but it's almost the same thing. Our fee to manage all of these services, plus several others, well, let me go back just a second. We have an in-house accounting staff of 6 people, so all of the accounting, with the exception of audits and the tax returns, are all done in-house. If you have a question, you send a check and you're not seeing it got through your bank, you can call the accounting office. They will tell you exactly whether it was received or deposited or not. If you have a question about your statement, you can go to the website first of all. If you can't figure it out or it doesn't give you the answers you're looking for, you can call our accounting department and that will give you the answers to any of your questions. We have 14 property managers, and the way we're structured, none of our property managers are overloaded. Typically, our property managers will handle 300 to 400 units, which is very easily handled by a competent manager. So they don't have 1,000 units that they're not going to be able to do a good job of due diligence with each and every property. So the $1,500, as I said, takes care of all of these. I mentioned the financial statements. We will provide receipts. We will set up the payment of bills under this scenario. Your routine maintenance monthly bills, whether it's electric, whether it's utility, whatever it might be, we will pay those automatically. And it's structured such that if the board determines they want 1 signature or 2 signatures or 3 signatures, they will have the ability to structure it as they may say anything over $1,000 has to have 2 signatures, a board member, a treasurer, the president, whatever, and Advantage, or not, Advantage doesn't sign at all. So that's all structured based on your desires and whims. We will not sign anything other than a regular maintenance bill without board approval. If we go out for a bid on a construction project and it's $7,000, we would not let that contract without the board's involvement and their approval. The books and records of the association would be in our possession. However, they are open to the board at any point in time. With 5 days notice, if they need to come down and review those, or if they need to be brought to this location, that is part of it also.
Is there a cost?
No. 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 As I said, as far as any agreement, whatever the board determines is that benchmark, whether it's $750, $2,000, we have no ability to sign any checks above that without approval and or signature from the board. And most of this is in the proposals you're seeing. The last page, one other point. If, unfortunately, this didn't work out, you signed an agreement with us and it's terminated, you have a legal right, we have a legal obligation to return to you every record, document, any and everything that is your association's legal documents. We cannot refuse to return those to you. That's kind of a synopsis of the general contract. If you turn to the last page, these are the only other additional charges, if you will, if you want to talk about extras. It's a management services fee schedule. at the top section there, unit turnover or refinance, typically those are charged to the buyer, seller, or the owner. That's your, whatever might happen in that closing transaction, the owner sells. Those are not charges that would be coming to the association.
The owner pays.
Correct, yes. And so those fees, don't get confused that those would be billed to the association. Those would not be. Project management, for clarification, and this is strictly an optional thing, if in fact you had capital improvements, roofs are being replaced, $50,000. You could allow us to be the project manager for that, meaning we would coordinate, do everything from start to finish of collecting and putting together the bids and spreadsheets to compare recommendations as to who we think you should go with, making sure insurance is in place, making sure the contractor shows up when they're supposed to show up, making sure permits are brought in appropriately and posted appropriately, right through the closing for lien waivers and so forth. If we do that for any project over $10,000, we have the ability to charge you 5%. That doesn't mean every project of that type you would be charged 5%, but again, if it is an extended project, a fairly substantial project, and let's say there are a lot of loose ends that could come up, you probably get charged the 5%. But again, you know that going in. Administrative charges, postage, we basically bill you whatever the postage cost is. Right now, 42 cents or certified, whatever. We bill you the actual, we don't put a markup on it. And the fact that we are so highly electronically oriented, the number of postage items going out would probably be far less than what you're currently doing. On average, for a community this size, if it's $30 or $40 a month, that's probably all you're going to pay. Let me go back to the management fee also. We are offering a 2-year guarantee on the $1,500. So year 1 and year 2, that would be the fee. There would be no increase in fees until the 3rd year. 3rd year, and if we make it to the 3rd year, hopefully you're very satisfied with what we've done. So the first 2 years you're pretty much locked in. We have to perform and prove ourselves. The 3rd year, maximum of up to 4%, which I think is pretty reasonable as far as any increases on the contract. Court appearances, if one of our team had to go to court for whatever reason, that's very seldom. That would be $100 an hour. Typically, the legal team or the lawyers are the ones that would be going to court. Typically, we would only be going to testify or hold witness to certain things having taken place. So as I said, in the course of the year, that may happen once or twice. Board meetings, there are 4 that are included in the contract, the base contract of $1,500. One of our team will attend 4 board meetings, which includes the annual meeting as well. Any meetings over and above that would be $100 per meeting. And I believe you're doing annuals right now, I mean quarterly right now. We do have a website, as I mentioned earlier. It's a very sophisticated website. It's a very informative website that you all would have access to. We have a $149 flat fee, annual fee. The association pays that, but that is just for maintenance. We don't mark that up either. For those that would be using a coupon book to make your assessments, there is a fee of $8.95 per unit for that. If you're using ACH or credit card or some other method of payment, you wouldn't have to worry about that. So when all is said and done, there are only 2 fees that potentially a homeowner might have to incur. The payment coupon book, if that's what you're going to use, yeah, that's it, just the payment coupon book.
I was going to say that $149 maintenance fee for the website, when the association purchases that, every homeowner can then use it, right?
Correct. The only differentiation, the homeowners cannot access
Board stuff.
the board stuff, because you can't check to see what your neighbor owes, according to condo law.
Yeah.
Only the board of directors can access all files. So I wanted to make it real quick. I'm open to any questions that you might have. As I said, we've been around a long time. We manage properties as small as 10 units up to 350 units.
It will be possible to have a monthly automatic payment and
Oh, yes.
online payment without
Absolutely.
the coupon.
Yes, absolutely. And it's your choice. It's your choice as to which route you'd rather go. So if you don't use the coupon booklets, there's no $8.95 charge.
Okay.
As far as doing a transfer from one management company to another, what amount of time does it normally take to do a complete turnover?
It really depends upon the relationship and the cooperative attitude of the outgoing management firm. Legally, they are supposed to turn over, those are your records. Legally, they cannot deny you access to those. They can stall and they can delay, but we can put pressure on legally to get it done. We can subpoena the records if necessary. So by legal methods, we can get them. If a company really intends to stay in this business, it does them no good not to pass it along. But we can help you facilitate that. And that is the critical piece, because without those records, it's very difficult for us to move forward, because everything is based on what has happened previously.
Correct.
As far as moving forward and making sure it's accurate. If you're going to have an audit, or you typically have an audit, that's another thing that we would allow them to complete, because it's a much smoother transition rather than us trying to come back, backtrack, and research everything that's gone on in the last 3 years to get you an audit. So typically what would happen is your incumbent, since they've given notice of termination, they should all, have you sent a demand for documents? Okay. You should document when that was done and what you have received, if anything, moving forward. And if after 2 weeks you've received nothing or very little, then you would need to consider contacting legal to help facilitate that.
Question, at this point, what need?
Well, you're working with a legal team now, aren't you? Or are you on a retainer?
No.
No.
No?
It expires December 6th.
We could, depending upon when you signed a contract, your termination ends the 31st.
That's what I'm saying, it's really tight.
And have you had cooperation thus far?
No.
Depending upon the direction of the board, if you would direct us, but that would have to be after we have a contract in place.
Yeah, that's what I'm saying, it's kind of,
I will have to check whether we could go ahead and implement a contract dated start date in the future and still be able to perform some of the functions in the transition.
it's just gonna be a hard way to go, because I've requested twice now information, I've got nothing. They've now told me that the only person they will deal with is the president, really.
Okay. I got a couple questions actually. So you're looking at cooperative turnover, a month, 2 months?
Typically our transition is up to 3 months, but that doesn't mean we're not ready to go. We can do it in 30 days. If we've got everything ready to go, we start implementing right away.
Right.
Typically, before it's up, running, and smooth, it's 60 to 90 days. But that doesn't mean you're not being managed during that period of time. The problem that I see right now is that you have a company that's terminated you and told you that we don't want to manage you anymore, and if they don't cooperate, they've really held a gun to your head. I'll have to consult with our attorneys to see if we could do some sort of letter of intent or some method to allow us to help you get the documents that are needed. Now, under your contract, I don't know if you know this or not, you're obligated to pay for the last 60 days until the 31st, is that correct? Okay.
As far as doing a accounting transfer, you know, some homeowners do use coupon books, some do complete with automatic debit. Will everything stay in motion up until a final, we've completed all transactions with the prior, and then you'll make changes?
Correct. You'll determine whether you want to stay with the same financial institutions you're currently with or not. We have several that we work with that may or may not be a better situation for you. If you decide to stay with your current, who are you with them?
There's a list of them.
Okay.
Yeah.
That's an evaluation that we would do during the transition period. We look at who you're using now, how they're functioning, what their charges and fees are, and compare that to who we typically have used. If your situation is as good or better, it would make sense to just stay with that and just move forward. It's a very easy thing to transfer from one management company. If it's Bank of America or Harris Bank or whomever it might be. It's a very easy thing, and the bank doesn't care as long as they keep the business. We would just transition that on, and then maybe make changes down the road, 6 months or a year from then.
Okay. Anybody else? Anybody got anything on the tip of the tongue?
At what point do you know, like I know the way I pay my assessments now, but with the new management company, what point would I find out, am I going higher, am I going lower?
Okay, that's a good
Well,
one.
you know.
Good question. Whatever is in place, if you've not voted for an assessment increase or a special assessment, if you've already determined in your current budget and the budget that's been put together, if assessments are supposed to remain stagnant, that would carry forward. If there's a special assessment that's been approved or an increase, that would be moved forward unless the board went through the process of canceling that out. So whatever's in place would remain in place.
I can speak on myself, and I believe Scott can agree. As far as approving a budget, we're going to hold place what we currently have. There has been one proposed, but we will not be implementing any new budget until we have a complete turnover with a new management company. At that point, we're going to have too many spinning wheels, and I think there'd be a little too much confusion for each homeowner. So I think the logical thing to do would be, let's get a completed turnover with management before we jump ahead to changing our budget. And in this, I was being proactive when I started looking at their numbers, thinking, how can I cut $30 a month off of our budget now for each assessment? I think after the next gentleman speaks, you'll see that there are ways that we're going to be able to cut a lot of money out of our annual income. Or out of our
And your monthly payment should be
I hope that
You'll
answers-
also, if and when the transition is made, everyone will receive a welcome packet which will explain exactly how the coupon program works, how the website works. You'll be given a password and ID for the website. And again, it's a tremendous tool because, again, you don't have to search out the management company. You just go online, check your account, you know what the status of it is. You can check us out. We have our references on there. You can check out who the personnel in the company, I mean, virtually anything and everything you might need is in there. So it's a really great tool. The welcome packages will go out. Behind the scenes, we would be working with the board in doing the transitioning. So it's very transparent for you, the homeowner.
Any more?
Does anybody here pay by coupon book? Who is it addressed to? Does it go directly to a bank?
No, it goes to,
some lockbox, PSI lockbox.
yeah.
Yeah, typically that's what happens. With us, it'll go to our downtown office.
So that'll still end up in the account?
Oh, yes.
Okay.
Yes. And every owner who has a balance due will receive a monthly statement, your monthly statement. If you have a zero balance or a credit balance, those are the only ones that don't get a monthly statement automatically.
Awesome. Anybody else? Once, twice? All right. Thank you, sir.
Thank you.
Okay, you're up.
I left cards up here in case you need to call me for any questions after the fact. We have 3 offices. One is downtown Chicago, one is in Schaumburg, and one is in Highland Park.
I apologize, I didn't make.
I don't need one. You can just pass them out to them and they can.
Yeah, you guys get the homeowners. Oh, it's got the same one?
Do you want one?
You gave me something already, that's fine.
This is a little different than the one I had.
That's fine, Scott's got
See,
one.
we tweaked it a little bit.
There's some conversation about
Okay.
another workshop.
Well, so I've never followed a celebrity before. It's a tough act to follow. I just kind of wanted to get into the nuts and bolts of insurance because usually when I go through a policy or a proposal like this, it takes me an hour, and you guys don't have an hour. But I'll hit on some of the major points. I did want to point out that I think Philadelphia Insurance is a fine company. That's who you have now. I don't think that the agent has really rated the policy correctly, that's just my opinion. I think he's got far too much coverage. There's 2 ways to rate a policy. You can rate it the insides and the outsides of the buildings, or you can rate just the outsides of the buildings. Your covenants say that it's supposed to be rated for the shell only, and that would just be the outside, not the inside. When you rate the shell only with the square footage you have, at about 248,000 square feet total, you're coming in at around $12 million, just a little under that, to cover that shell. Your covenants also say that you guys have to cover the insides, the homeowners have to cover the insides. So there is options in here to do it differently, but they seem to be just optional things that the board could decide later, that if they wanted to cover the insides and then charge you with extra premium, they could do that as well. But I don't think you're doing it that way. So your current agent has covered you for $38 million instead of 12. And when I calculate 248,000 square feet at inside and outside, I'm approaching 38 million with my calculator. So I think that's what's happened is he's just given you a lot more insurance coverage than you need to cover the stuff that you're supposed to as an association. So that's the main focus here as to why the premium is so darn high, because you guys are spending around $40,000 for insurance. And we're going to be well under $15,000 for insurance. We're quoting Travelers Insurance. Travelers is an A-plus company. They've been in business since 1850, so they've been around a long time. They're over $100 billion. They do specialize in association coverage. And they're actually targeting associations. They want the business. They want this business because claims on these are not that high, believe it or not. They do make money at it, and they can afford to get a pretty good deal on it, as far as pricing. So they are looking for it. Us as an agency, I gave you some information there in front of your packet. One thing we're going to do is we'll work with your property manager so that he doesn't have to go out and find his other agents. We're going to work with him on an annual basis to review the policy. We want to look at the policy every year and make sure that the limits are correct, because there may be inflation on construction costs. Believe it or not, construction costs have continued to rise over the years, even though we're in a recession. As far as homes go, homes are way down, but prices to rebuild them is way up. And we have the biggest gap right now between home replacement cost and home sale price in history. It's never been this big of a gap. Usually it used to be the other way, where your replacement cost was lower than what you could sell a home for, because it doesn't include the grounds. Does that make sense? a lot of this is just, it's not that like rocket science, it's pretty simple. So I try to make it enjoyable because otherwise it's like reading an encyclopedia, and that's not very fun. Let's go to page, we see the premium here on page 2, proposal, at $13,557. Now this is a little harder than I gave you, Rose, but I put some options on here. And I want to I'm not going to go through all of these coverages. If you go to page 3, there's a lot of stuff in here that you're going to look at and say, what do we need that for? And quite frankly, a lot of it you can't take out because it's part of the package, because they throw in a bunch of stuff that maybe you will need, and you're going to pay for it anyway, and everybody does it. And Philadelphia's got stuff in there. It's actually, if you, I have the Philadelphia policy. Here it is. This is the policy. It's about 250 pages. And I've actually read, believe it or not, most of it. I didn't read every word, but I know what I'm looking for, so I read the important stuff. You have a lot of stuff in here also that you might not need. I'm going to quote the stuff that you might not need too, and if you want to pare it back and save some more money, we can do that. But I want to at least show you everything. Your covenants say that you may or may not need earthquake insurance. That's the 4th item down from the top there under coverage description. Your current policy has no earthquake insurance. I priced in earthquake insurance. It's a few $100s. I put it at $100,000. That is going to cover earth movement. That's all it covers. If the earth moves and it cracks the foundation of something, you've got coverage. There's a deductible of 5%, so it's a $5,000 deductible on the earthquake insurance. If you don't want the earthquake insurance, take it off. I have no problem taking any of these off. It's up to the board as to whether you want it. That's why I kind of came in here. I was thinking I was going to be asking a lot of questions to the board to see what you guys want, because I don't really know what you want. There's some things you have to have. Currently, you have flood insurance on your current policy at $100,000. However, you are on a very high piece of property. I've driven the grounds. Well, you're not in the floodplain either. I have actually looked at the FEMA maps, and I have a copy of one if anybody would like to see it. Since you're not in a floodplain, travelers will not give you flood insurance. So, because you're probably not going to flood, you can't really buy it. I'm not really sure how Philadelphia has it on. I don't deal with them, and I can't answer for them. So, I figured instead of the flood, I'll give you the earthquake. So, thanks. I have earthquake on my house because it's like $90 a year. We've had them around here.
Yes.
Kentucky just had.
All that fracking going on.
Another thing I'd like to kind of highlight is employee dishonesty. You guys don't have employees. However, I have named non-compensated officers as employees. So if one of the board members runs off with some money, that's coverage of $25,000 in there. I can take that off if you don't want it. Let's see, everybody loves the fine arts. They like to have their fine arts covered, and you get it whether you want that one or not. Every company includes it, unfortunately, and you're going to get it. So, down further on that 3rd page, did you have a question?
No, she was asking about fine arts.
Oh, fine arts.
It's like each individual person, not the whole,
No, it's we're covering, well, we're covering the association, but I'll talk to you about how we're covering the owners on the liability. Business income extra expense is down under business income and extra expense options. And what that says is if there's a fire or something and there's lost revenues because of a covered claim, that the association's covered for up to 12 consecutive months for actual lost revenues. And then there's a bunch of other things in the business income. Again, I don't have an hour to go through all this, but if you guys have questions, I'd be happy to answer. On page 4, we get to the liability. Now, your covenants say that you need $1 million of liability coverage on this policy, and then it says you need $1 million of umbrella coverage, which goes over and above the liability coverage, so you need $2 million. So what I did is I quoted $2 million, so now you don't need the umbrella. The other interesting thing I found out was you actually are carrying a $5 million umbrella
We are.
and paying for that, and I'm not sure why.
It was a builder's insurance.
Yeah.
Because, but your covenants don't say you need $5 million. I'll sell you $5 million. I've got $5 million quoted here for you, because I'd love to sell it to you, but you don't need it.
Thank you, sir.
Okay? Directors and officers, you have $1 million and you need $500,000, so I quoted $1 million just to show it to you. But I attached it to this policy so you don't need to buy a separate one. Because right now you're paying $1,400 a year to travelers for a separate D&O policy for the directors and officers, and you don't need to do it that way. You could combine it under this package. As I went through, again, it looks like the agent, well, that's another story. But you're paying way more than you need to.
Yeah, everybody's got to eat, right?
Yes. Okay, page 5. $11,752,687 is replacement cost for 248,000 plus square feet of owners, of association ownership on the buildings. That's 177 units, 35 buildings. Okay? It's all there. I checked it and rechecked it. I gave you a $2,500 deductible because that's what you have, and that's not really too much. I think the association could afford $2,500 if there was a fire or something major happened. If you want different deductible options, we have them. You can go up to, I think travelers will go up to $50,000. You can put a pretty high one on there and make it a lot less, but at some point, those higher deductibles don't save enough to justify the amount. So $2,500 to $5,000 is usually what we use. Much over that, the savings isn't great. I should have turned that off. I apologize. I don't even know when that is. I hate when that is. All right. Business personal property, I put on $25,000. That's right under your 11.7. I did it because you currently have it. However, you don't need it because unless the association owns property that's not attached to a building. Does the association own any property?
We have all lots.
One
outlot,
We
but
have all lots.
No,
One.
I mean, I'm talking stuff.
no.
No.
Stuff, no. Desks, computers, equipment, lawnmowers.
No,
Anyway.
we don't,
No,
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 no
any-
groundskeepers or anything like that here, so we don't have
So
any.
all you own is the buildings.
Correct.
That's it. So you don't need it. Okay. Another thing we can take off.
I think some of the things that were on our current policy for was for the builders. And now that the builders are completed with their work, I kind of feel like some of that policy was assisting them.
But that's where the annual review process
Right.
comes in, because if I was representing you for your insurance, I would have been in here at least once a year at the board meeting to say, you know, have you guys made changes? Do you still need all this? And if you don't, we're gonna start stripping some of that off. So you're really not getting any service right now.
Like the
That's
workman's
really the
comp.
issue. Pardon?
I remember seeing a workman's comp on the current policy.
Well, as long as you're on that, you have workman's comp, but you don't have employees. So I can sell you a workman's comp policy for no employees and charge you something in case you get employees. It's there, but you're gonna pay for it anyway, and you're not gonna use it because only an employee is covered under work comp. And that's what it's for. You're spending about $500 a year for a shell policy. It's if any, it's checked if any employees are present, and if none are present, nobody's covered anyway. So if you hire someone to work for your association, you can add the workman's comp later, at a later time, and actually cover them and rate them the way you want to do that later. So, Les is shaking his head here, I'm sure.
Well, I'll just put one little tidbit in here. One of the things we pride ourselves on is that's part of the management's responsibility to make sure that these things are reviewed. And if in fact this situation has gone on for many years. You've paid a lot of additional dollars that were unnecessary.
Right.
And we, I won't speak of any other company, we as a management company, our responsibility is make sure that this is reviewed, any other contracts you have in place are reviewed on a regular basis moving forward. So you don't have to wait 5 years to find out you spent $100,000 that you need to spend.
I agree, and that's where the insurance agency also needs to be involved on a regular basis with you folks, just to find out what your needs are, because really it's not about me, it's about you. That's really what it comes down to. Okay, so let's keep moving along if you don't mind. Building glass is one under the additional described premises level coverages. It's required to be covered, and it is covered. I can change the deductible on glass to a lower deductible if you'd like for a slight extra charge, but I didn't think it was necessary at this time. Earthquake is reiterated here. Electronic equipment breakdown and or equipment breakdown, electronic data press, all these things. If the association owns equipment, who owns the heating and air conditioning?
We do.
Each owner.
The owners own their owners. Does the association own any other type of equipment that would generate power, cool and heat buildings, and something like that? Okay, so that's a coverage that we could look at possibly doing something. The equipment breakdown coverage, I think we can actually eliminate it if you didn't need it. So another way to save some money. Outdoor property, you have to cover your signs, we are covering them. Anything within 1,000 feet of premises is covered. Okay? It's in there. Page 6, we've got sewer and drain backup. I have 100,000 in there. It's another optional thing you can cover. Your current policy has no coverage for that. I don't know if you need it, but I'll let you guys talk about it, because as a unit owner, just so you understand, if you're a unit owner there and you have a drain back up or a sewer from the sewer system, let's say it backs up into your home, you're going to have to cover your own part that you own. If it does damage to the association's part of the building, that's where this would come into play. So again, this is something that you guys can discuss. What do you do?
All disaster restoration work.
Oh, you do? Okay.
That's all I do.
So we've got 100,000 of coverage on there. That's the maximum I can give you with travelers. I would recommend that you talk seriously about that. It's not real expensive. It's probably $200 or $300. I have to check, but it's a little bit extra. But you guys can decide if you want to go there. And then when we flip to page 7, I'm sorry if I'm losing anybody here. Power Pack and Extend are two endorsements I put on because you have similar endorsements on your Philadelphia policy. However, I don't know if you need them. By the way, I did include ordinance and law too. That's in your requirements. That's if somebody comes in and says, part of the building is destroyed, insurance company says we can fix it. Village comes in and says, no, you gotta tear it down and replace it. That's ordinance and law.
Thank you.
That's what it is. You're required to have it. I have it in here. I think I included 250,000.
That'll cover one building or just partial?
The whole place is covered for you.
No, for 250.
Well,
Say we
it
have a
covers,
tornado or something.
yeah, the ordinance is only going to be if the ordinances override what the insurance company says we can do. So if Traveler says we can fix it, but the ordinance says no, you can't. And there's 3 parts of the ordinance and law. I don't know if I missed it. This is what happens late at night. I think it's in here somewhere, and they put so many columns. I know I included, I think it's on page 5. Yeah, page 5. I apologize. I did want to hit on that bullet. You have it now. There's 3 portions of ordinance and law. Loss of undamaged portion. So that's where they say, okay, you have to tear it down. You've got to pay for that now. Then there's the demolition cost. That's another $250 because you got to demolish it and haul it out of there. And then there's the increased cost of construction. That would be if you reconstruct and the village says, now you need sprinklers in that new unit that you're reconstructing. That's where that would come in. So you've got 3 levels of ordinance in law. Does that make sense? I hope I'm explaining this all okay.
That's a headache.
Wonderful.
Anyway, let's go back to page 7. Power pack extend gives you broad named insured. Your covenants require you to have some of that, so I figured it wouldn't be a bad idea to put it in there because otherwise the named insureds, they have a limited version of what named insureds are, the association and certain people that work for the association. It broadens who's insured. It also includes blanket waiver of subrogation. What that is if Travelers pays a claim, but they can subrogate or go after somebody else to recoup some of that money, this prevents them now from doing that. That's a requirement for some projects you may do.
Yes.
If you add on, if you put additions, improvements, those sort of things, they may require the contractors. So I figured it wouldn't be a bad idea to have that one. The power pack has some things like identity fraud and some other things. You may or may not want that. It's up to
How
you.
much was that per year?
Each one of these is $200. They're not very expensive. I think you could probably bring this down another 1,000 or 2, possibly, as much as that, but it depends on what you want. So, I'm trying to think of what else I had here. I did do a work comp quote, it's in your package. Travelers minimum is 1,100, not 5. They're not going to do it for 5. Hanover is a really small company, so they can do it for 5. Travelers is really big, and I would just tell you not to do it until you hire somebody. Let's see. Oh, we get back here. You have something in your ordinances or your covenants that say construction code, and I don't know what it is. I've not had to deal with it. It's called construction code.
I'm assuming that would be dealing with the village codes and/or city or state or whatever.
Yeah, you've got ordinance and law, so I'm not sure why you'd need something else called a construction code, but it's in your...
Maybe in case of fire, when you rebuild and the new code requires extra?
Well, we've got that covered under the ordinance and law, so I'm not
Is it
really
because it
sure.
was a builder's policy?
Very
It could be something the builder wanted.
In case he didn't meet code?
But I mean, it's pretty common for I'm sure you could probably agree, like if you're doing electric work or something like that, and it doesn't happen all the time, but a code could change in the middle of a job, and you just spent, 100 hours doing it, and now you gotta go back and redo it. I mean, I can see something like that.
I think it was a builder's stuff.
Yeah. You have hired a non-owned auto on your current policy, and I don't think you need that. You have auto insurance on your policy. It covers a driver of their own motor vehicle working for the association or liability for the other person if they hit someone.
Frank?
That's me.
Yeah.
You have it, I don't know why. You
Can you get rid of
probably,
it?
I didn't put it on,
I know. Get rid of it.
but I can.
Yeah,
Because if
well,
we more,
thanks.
then we make more.
He's a
money.
nice guy.
I'm trying to be generous. Okay, let's see. In your covenants, you need to review the replacement costs on an annual basis. If you have not been doing that, you should be. All risk and special form, we have special form. You have special form. It's the broadest form of coverage. It covers you for the most types of disasters that can happen. And you got it. We're giving that to you. Just to reiterate, the sewer backup I included, the earthquake I included, flood, no flood, inflation guard. You don't need it, you don't have it. When you go with a blanket, you don't get inflation guard because what you're supposed to do on a blanket is just review the limits every year. All we do is run it back through the system with the square footage to make sure it's still covered for the right amount. You just do that once a year, you don't need it. Ordinance and law, we got that in there. Construction code, wasn't sure. Condominium endorsement, yes, this is a condominium policy. There are certain things that go along with it. Errors and omissions, they say in your covenants it can't be excluded,
That's correct.
but you don't have it because you don't have a fidelity bond. Because Philadelphia and North Travelers includes errors and omissions on the general liability package. I haven't seen a fidelity bond unless you can come up with one.
We'll talk about that.
Okay. Because I'm not seeing it in their current package, and I can't find a fidelity bond in any of the documents they give me.
But that, I believe, we'll talk about.
But we could sell them a separate policy.
Right, that's typically the way it happens, because I believe that's according to condo law, Illinois condo.
Is it?
Yeah,
That's where I think, though, we need to talk about a fidelity bond, because
Right.
it'll be in there.
correct,
And really, that's what they should be doing,
right.
in my opinion.
Yes.
That would be.
So we don't have one now?
You didn't send me one.
I feel like I've read that before. I'm pretty sure that we do.
Okay. We may
And I
not.
have
Yeah,
a piece, when we get to the back of your package, there's a piece the Travelers supplied us that shows the difference between the D and O and fidelity. You're better off taking the D and O off of here almost, because if you need the E and O and the D and O, then you go with the fidelity, because it's all on that, instead of trying to, so, I don't know if that makes sense to you.
Just so everyone is aware of it, the way that the guidelines, the way that laws, the rules and everything are determined, Illinois condo law is the final determinant as to what you have to do or not. Declarations and covenants are typically passed down from the builder. Typically those should be reviewed, and typically those should be revised to coincide with condo law, because when all said and done, condo law supersedes everything. So if there's any conflict in the covenants and the declarations versus condo law would win in a legal case. So what is typically supposed, and condo law is reviewed on an annual basis at the state. So what you really need to do is coincide your revisions and reviews of your declarations with condo law, and then the rules and regulations are more for the daily, weekly, monthly regulation of your community. Grass has to be cut, can't go over 6 inches or whatever. You determine, the board and the ownership have determined how you want your community to run. Can't walk a dog without picking up the poop. So that's the progression of authority, condo law, decks and covenants, rules and regulations. And then insurance policies have to coincide. That's why Paul keeps referring to the covenants. But if in fact condo law has changed as far as fidelity bonds or whatever, that would have to be that requirement.
Yeah, let's finish up and then I'll talk to you about the fidelity bonding, because it's very expensive. It's not that expensive, and I think that might be a better option.
Your management company has to have that also.
Your covenants say you're supposed to ensure the board, the association, the management agent, employees, developer, as additional insured, the unit owners, the manager, the board members, and the officers on your liability insurance. And I did that. The only thing I didn't do, well, I almost did all of it, except I didn't add the developer as an additional insured, because I think he's gone.
Yes.
But I did everything else. There's a checkbox in here. I don't think it's showing up on this paperwork, but in my system, when I go through the screens, and there's a checkbox. It's a, let's see what they call it. I think I wrote it down. Maybe I didn't. But it's a condo. Let's see here. Yes, it's a townhouse endorsement. That's what it is. What Travelers then does is include all the townhome owners plus all these other people as additional insurance for your common areas. That's in your covenants. Got it? Costs you a few bucks, not much, but it's in there. Okay. Comp, we went over D&O, got, glass medical. Medical, you're required to carry, we gave it to you, 5,000. Medical is no fault, if somebody slips and falls, they're gonna get up to $5,000 regardless of any liability. Yeah,
Yeah.
I think there's some ice on
Yeah.
Let's see, no insurance. Okay, I think that's it, but let's go back to the back of the package. And I did bring some things. I brought the flood map if anybody wants to look at it. I brought some of the endorsements that Travelers offers in case you want to see those. I did do a quote for a fidelity bond for I did 2 quotes. I quoted them with Hartford because Travelers has an application that I can leave with you to get a quote for them. But Hartford, I can actually go and quote it on my own. So their pricing probably isn't going to be that much different. But I wanted to at least give you an idea of what you could do. So you could buy $270,000 of coverage because that's what you got in the bank. I just used that figure. With a $2,500 deductible for $457 a year. Or you could buy $25,000 with a $1,000 deductible for $150 a year. Or you could buy $1 million, you're probably looking at $1,500 or something. So, but then there's pieces in the back here. Actually, I have an extra one. Let's see. This is a nice piece where you guys might be able to use that in your practice. It describes the difference between directors and officers on the left side and bond and financial with a bond. Okay, and what the differences are and how you get a lot of extra stuff with the bond. And some of that you might need. So, if we're doing the job, I think that's the way I would be leaning toward having you do it that way. And there's 2 pages of stuff there. The exclusions aren't there, and there's just broader coverages in those bonds. So, all a bond is an annual insurance policy, but they call it a bond, because it's got different stuff in it.
Does anyone have any questions?
Questions? Yes, I hope I didn't bore you all.
I have a question. You talked about exterior, 1,000 feet around their property. Would that include decks? Would that include patios? Would that include driveways?
What the company does ultimately is read your covenants, see what they're supposed to pay.
Okay.
Really?
So in other words,
If they're
decks-
I'll pay mine.
driveways will have to come.
Because the owners own them? I didn't read that part, but if that's true, then they would not pay for it. That is true. And you can cover, see, you're covering, right now what you guys are doing is you're paying to cover everything. And if Philadelphia came in here to settle a claim, they're not gonna pay for everything anyway. Because they're gonna read your covenants and pay for what the covenants tell them to pay for. That's what they're gonna do. So that's why you're paying so much money. It's a lot of money.
So I think the concern that some are going to have a hard time wrapping their head around is you're offering us coverage that is $15,000, and we have a coverage that is $45,000.
It's gotta be better, it can't be any better.
I think that we're gonna end up probably around, I don't think we're even gonna be at 14. I think we're gonna be probably 13 when we're all done, because we're gonna take some stuff off of here. We're gonna probably have a bond.
Okay.
You won't need the work comp, you won't need the umbrella. You could, well, that's where, you guys could, I saw that in your package, you can help a little bit with covenants.
Oh, yeah, we
You might pull the
review.
umbrella out, maybe,
Right.
I don't know. If you can do it with 2, you could reword it and just say 2 million total, whether that includes an umbrella or not. It
Correct.
shouldn't make any difference.
Yeah, as I said, of the 3 things that I mentioned, the condo law, we have nothing, no have no control over that, that's state legislature. Decks, rules and regs, you as an association can change or revise those as long as you coincide with condo law. So if you want to pull something out of there, as long as it doesn't violate condo law, you can do that.
There may be companies that won't write 2 million liability, they want you to buy the umbrella, but Travelers will give you 2, they won't go over 2 on the base policy. So you could do it that way without buying an umbrella. You could buy an umbrella, I did quote an umbrella, and I think it was $500 for $1 million. So if you want that, but $5 million is like $2,500, you know, so, and up, actually, I didn't put it in the package because it's more, if it's double if you have it over the work comp. If you have work comp, the umbrella goes on that too, and then it's like double. So I didn't even bring the quote because I wasn't sure where we were gonna end up, white waste paper, and throw it away. So, my recommendation would just be rewrite the code, tweak it a little bit, and just say 2 million is fine as long as it comes from either the base policy or with an umbrella, doesn't matter, just so you have 2 million. If that's what you want, you know, that's fine. So any other questions or comments? Or
This part I understand.
So what do you think, Mark? I mean, is
oh, because you
I know that
what you
there
asked.
is,
Right.
Actually, I have a question, just because I thought it sounded funny, for the extended endorsement. What is aircraft charter and crew?
Yeah, good question. I've never had to cover once.
yeah. And that's in our current policy?
You might own a plane, you might own a small plane. Maybe. It's in there.
In closing, just my last statement is I think what we're trying to offer you is better services, better ability to access information, longer period of price guarantee with tremendous cost savings with what you have today. So,
Thank you both.
Thank you very much.
thank you.
You're very welcome.
I'll get in contact with you both.
Okay, let me leave this with you guys.
Okay, that's not a problem.
This is just a, that's just a sample
Yes.
contract. This is just a sample of the monthly financials. So you can actually-
Okay. Okay, awesome. Yeah, appreciate the time.
I'll check with legal to see what, because we can't act for you until we are taking.
No, just receive it.
I think since they've given no reason.
Yeah, this weekend.
I'll get back to you on that. Just keep me abreast of how we operate
I've been at a challenge for the last year and a half. I'm getting phone calls on a daily basis.
You know what's going on?
Look at the whole wall. Yeah, this weekend.
I know, what's there, Harold had,
Oh, okay.
Penny had, she had a, she said, she messaged me, I'll be there tonight.
They've got to give it to you.
And then Nancy, she's on.
Oh, good, okay.
We asked her to dial in.
You're Mark? Okay, good. You guys do, okay. Okay.
We could say,
Okay. Yeah, okay.
For 5 years.
What do you? You may have one of ours. Have you heard of us?
Actually, we were talking, we don't know.
I don't even have a board member.
Because we've got probably 80 buildings in the city.
We got some issues.
Okay, all right, okay, Mark.
All right.
You got it.
Oh, yeah.
Thank you, you too.
You're welcome, what's your name? John. Good meeting you.
Ta-da, have a good night.
Well, if they're going to give us a card.
I never thought of that word, but that's a good word for it. It is. The more I looked at this, you guys, I don't know, I want this. So, you know, and you're telling me you're not gonna turn on this over.
Someone doesn't have the business.
Or a builder that's gone.
You know something, usually I drink my soda, my drink, I need milk. When you talk about taking all this money, I'm excited.
Most people don't get excited about insurance. Well, you know, I like to explain how it works.
I need
Make sure that policy so that you guys know what's going on.
Can you dissect this?